Tuesday, the 9th of May, and we are on the FTSE 100. So I've just entered into a short position on this market after the 8:10 pin bar. FTSE this morning, it pressed up into the zone up above. You can see the ATM candle here, which is the FTSE 100 open. We had a strong bullish run up into this zone right here. We then started to reject. We got the pin bar, and I have entered into that sell position. Now the FTSE 100, it made a rally on Friday, a strong bullish rally. There was a number of different reasons for that rally. We had election results coming out of the UK. We had non-farm payroll out of America. And then we also had expectations of the French election result. What I was looking for yesterday on this market was some sort of a clue as to how the FTSE would then react with all of those things out of the way. And what we did yesterday on the daily time frame was, let me just move this down, we produced a doji candle. So doji candle looks something like this. Basically the market tries to break higher, tries to break lower, and then it closes almost on its open price. So where it opened is basically where it closed. So it's basically a day of indecision, a day where the market hasn't really gone anywhere at all. So what that said for me was, well, first of all, we have key resistance up above in this market. We're approaching the all-time highs. So even if this market does start to break up, I'm still happy to look for those potential sell positions. When you're in the all-time highs of a market, it's likely you'll see profit taking, and it's likely you'll also see bears looking to step into the market. However, what it is signifying is really that this zone here, which is up toward this section of the doji candle, and then this zone right here, which is representing this area of the doji candle right here. So the high and the low of the doji candle, those are the two sort of main areas that I am now looking at. If we start to break above the high area, it's likely we'll see another bullish bounce on the market. If we start to see the breaks down below the low, then I would expect a stronger bearish move on the FTSE 100. So this zone right here and this zone right here, these were the two key ones for me today. Now when the market pressed up into this zone up above, and we started to see the rejection, it's giving potentially a early sign that the market is going to press back down and test these lows. So that's the reasoning for the trade. Got the signal, got the key zone, market pressed up into it early morning. Everything lined up for the trade. Now what I will do is when the trade completes one way or the other, so whether it comes down to take profit or whether I get stopped out for a loss, I will then take you onto the daily time frame. I'll take you through the analysis of what I was looking at. You can see my stop level is just sitting right here. If it comes up to there, I will exit the trade for a loss. What I'm also going to do is, as always, I will pause the video. I'll turn it on when the market begins to make any sort of move. I'll talk you through exactly what it is I'm looking at, if I'm making any decisions on the trade. In fact, actually, what I also want to go over quickly is down below we have MA200 sitting right here. Potential support on the FTSE. We also have the zone down below just here. You can see the pivot point. You see it's a key support and resistance area. It's also sitting at 7,300, the round number. So I want to be a little bit careful if this market starts to break down into these levels. What I will likely do is take partial profit. So we see the market coming down into this whole area here. I'll be watching for reactions. If I start to see the reactions, I will close out 75% of the position and then let the remaining 25% run, potentially looking for it to come down into this 7 to sort of 85 area down here. But it depends how the market reacts. I'm still waiting to see if we get that breakdown on the trade. So let's wait and see how this one works out. Okay, the market has pressed up higher. We're just back up testing where the market popped up here, and failed. We have came up here, we had a little bit of rejection. We have had that nice, strong, bullish move up. So I'm just waiting to see how the market is going to react now. If it does break up, I am out of this trade for a loss on the position. Okay guys, I've been taken out of that trade for a loss. You can see the market has just came up, hit the stop level, and I have exited. So what I'm going to do is take you onto the daily time frame, quickly take you through the way I was looking at the market today on the FTSE. Actually, first thing, before I go over this, as with all the trades that I do, I post up the trade, the same trade that I take, post up every time the trade that I take on the Tuesday, and I post it up on the Wednesday. That allows me to show you the winning trades, the losing trades, imperfect trades, perfect trades, just whatever the trade is that I take. It doesn't allow me to cherry pick. And now what I find is whenever I post up a loss, lots of people come out of the woodwork. People who have never commented on the channel before, and they start advising me how to be a professional trader. I'm just, that's part, what we just seen, that's part of the way I trade. More than happy with the trade. It was just part of a normal trading plan loss. So please, especially the very negative ones who say it was a stupid trade, just keep your opinion to yourself. Just go somewhere else. But thanks all the same. Okay, so we're still on the FTSE 100, and I've just entered into a second short position after this 230 candle right here. What I'm going to do is add this onto the live trade video. So we've already had the first live trade, whereby the market pressed up, and I looked to get short at these levels. It came down, then came up and stopped me out. Now, what I always go over in these live trade videos that I post up is that the losses are very important. And when you're learning, especially, the losses can be almost more important than your winning trades. And the reason for that is because, it sounds very counterproductive, but the losing trades are where you really get the chance to learn and build that discipline as a trader. So what happens with a lot of beginners is that they enter into their trade, they get stopped out, they start freaking out, their trading plan goes out the window, they start taking random trades, revenge trading, emotional trading, all that good stuff, and their losses start to mount. And what would actually happen is if they just continued following, their trading plan, that loss wouldn't really matter in the long term, because it would be cancelled out by their winning trades and they would move back into profit. So when you have losses, it's a really good idea to note how you react. So we had this loss here. The market came up. There was a potential for a short position here, and it wasn't really invalid. The way to trade it would have been down into these levels, where if you've seen the rejection, you exit the trade. I did not take this trade. I was then looking for the breakout of this zone here, as I mentioned in the first part of this video. We're looking for the break above this level, and if we broke above, I was expecting that move up. What I was waiting for after we started to break above was some sort of a pullback, whereby then I could get into the market going long. Now we didn't see that. Instead, the FTSE just broke out of this zone and pressed up higher. Now, as it came up into the zone above, it began moving in a very specific way. It began making the high, the low, the higher high, the higher low. So it's giving us the clue that potentially this market is continuing that upward trending move. So what I was doing, I was still looking to get short up at these levels. However, I wanted to see a strong reason to get into this market. Now, what can happen is, as a beginner, you can start to invent reasons. You can start to say, well, the market gets up to this zone, it starts to reject here, it comes back up, you start to see another rejection, just enter the market. You really should wait. Your trading plan says wait, but what you actually do is you just jump in, because you don't want to miss this move. You've had a loss and you want to make that money back. And then the market moves against you once again. So we've pulled back, tested the structure, pressed higher. We paused at the previous structure here, came down, we then broke above. So we're still continuing that higher high, higher low movement. And then this is what we've seen. Let me just mark this in so it's easy for you to follow. So we've still continued making those higher highs, higher lows. We then pulled back into this level here, which would represent a retest. This is where you would expect, once again, the bulls to step in and drive this market higher. However, what we actually seen was the market come down, test these levels, and then attempt to press higher and fail. It actually failed at R3, and as well as R3, if we just get rid of this arrow and this arrow, what you can see, in fact, we'll get rid of this one as well, what you can see is on all of these candles, the downward tests, upward tests with the pins, the market came straight back into that level and failed. And then we've seen very strong rejection here at 230, which gave an engulfing candle signal to get short this market. So as soon as I seen that, I knew that, well, first of all, this small swing here, I'm just going to mark this in. So this is the structure. This is confirming the structure. As we break above, we come down, we test here. When this breaks down below this structure area, it's giving a slight indication. And nothing is guaranteed in trading, first of all. We're just looking to read the market and trade with what it is telling us, taking the higher probability trades. Now this one is telling me that potentially we're seeing a counter trend move. So after we've seen this candle, the market broke below the low, I was happy to take a short position. Let me just get rid of some of these lines so we can look at a couple of different things. Okay, so sorry if you can hear that phone in the background. It is going crazy with messages. And no doubt it's some subscriber emailing me about or messaging me about what's going on in the market right now. Okay, so now that we've started to break down below, what am I looking for? Well, really, I want to be a little bit careful with these areas here. And then down toward R2 sitting right here. Now, I have already suffered a loss in this market. My rules for trading are, if I get a winning trade in the day and I make 1% or better than 1%, or very close to 1%, what I mean by 1% is 1% gain on account. So your account capital, if you can gain 1% in a day, that's me done for the day. After a loss, I will take a second trade, if something sets up perfectly. With the second trade, I will increase my risk. So I risk 1% on the first trade. On the second trade, I risk 2%. So what that does is a money management technique that I use that allows me to take the second trade. If it's a winner, it clears away the first loss and puts me back in profit. Now, I don't suggest doing that if you are a beginner, certainly. I would only suggest ever thinking about something like that if you are already consistently profitable. I do it because I know, for me at least, it works on a high portion of times. Now, what it does mean is that on the times when it doesn't work, I lose 3% on the day. Some people, they can't handle that psychologically, emotionally. So it's something that you really need to, decide for yourself. But that's what I do. So now I am risking 2% in the trade, looking for it to really come down into here. And potentially when it comes down into here, I would look to close partial profits and run down into this zone below. It completely depends on how the market reacts if we see that move down. So what I'm going to do is I'm going to let this trade run. What are we at? Mark this in. This is my exit point. This would be my stop level. If the market pops up there, I'm out of this trade for a loss. But let's see how we get on. And I'll turn the video back on, as always, once/if we start to make a move. Okay, guys, the market has came down into this area right here. We are at half 3, and I am just about to close this trade out. Okay guys, so in regards to this trade, what I really want to go over is how beneficial it can be to build that discipline as a trader. Now, when you have a loss in trading, the temptation is there to abandon your rules. It happens, a lot to beginners. I could quite easily have just started jumping into random trades, trying to make that money back. And what ends up happening is you suffer more losses, or even worse than that, in all honesty, is you make the money back. Because if you make the money back, it's reinforcing in your mind that breaking your rules is okay. I know that sounds a little bit counterintuitive, but that is what it's doing. If you make the money back, it is a bad thing because it's going to keep resurfacing and eventually you're going to get stung. So rather than jumping into those bad trades, I waited. I didn't get the breakout trade here I was looking for. Had to watch the market make the nice rally whilst I just sat on my hands. Didn't try to jump in here. Didn't try to jump in here, here. Didn't want to jump in here, waited for the market to return and give that clear signal. Now, it's one of the most important things as a trader is to learn how to deal with your losses. Because in my mind, I wasn't worried about the initial loss because I knew that if there was no setup today, there'd be one tomorrow. If there's not one tomorrow, the next day. If not then, the next day. You're going to get a perfect setup once again, but the important thing is waiting for it to come and not damaging your account further before that happens. Now, what I'm going to do is, for this trade, I did it yesterday with subscribers also, and this one is also a good example. A couple of different reasons I'm going to do this. Well, first of all, I stopped showing results on trades. One of the main reasons I did it is because the trading industry is full of people posting up large winners and never showing losses. And it's, in my opinion, one of the main reasons that people get pulled into trading looking for lots of money. And what ends up happening is they lose lots of money, they suffer huge losses, and it is very, very damaging. I didn't want to be someone who was adding to that. So I stopped displaying the results on the trades. You know, there's trades in there in the live trade section from when I first started doing it that are still visible, but I stopped doing it for that reason. But what I also get is lots of people because of that sending me emails, angry emails, etc. Saying I'm trading a very small account, saying I'm not really trading at all. I don't know how that's possible when you can see the orders on the screen. But what I am doing this for is to show you that if you, first of all, if you build the discipline, I could never be trading today if I hadn't spent the time building that discipline. It just wouldn't be possible. I would still be blowing my accounts. If I would have run out of money. You know, eventually it would come to a point where I couldn't keep blowing accounts because I couldn't keep refunding the accounts. If you take a long-term view and build slowly, you will get there, but you have to build that discipline at the start. You have to be willing to take a long-term view. If you don't, I can assure you it's just not going to happen. Or you're going to make big gains, you're going to think everything's going swimmingly, and then it's going to come back and basically bite you in the ass. That's what I see all the time when these people post up things from people who have taken their courses where they're saying, oh, I made however many hundreds of % in the first year. Yeah, it's no good. It's no point in bringing people to trading like that because it's not realistic. You want to look for steady, realistic gains. So, yeah, gain today. So £562.50 on the day. So, relatively good result for the trading day. And it was only possible because after the loss, I waited. And I waited for that perfect setup. And when the perfect setup came, I looked to capitalize on it. When it got down to here, the greed didn't kick in. I wasn't thinking, oh, I'm just going to let this keep running, make more money. Seen the rejection. Noticed that it was half 3, which is really, you know, the latest I like to be trading. After seeing the rejection, this one came down, just closed out the profit. See it's popped back up and we're getting a little bullish react. Doesn't mean the market's not going to come down. But what it means is that I'm just letting the market tell me what to do, not being greedy, and I'm getting out. So let's have a look quickly on the daily time frame. I should note, guys, you know, if you're watching these videos, the whole point of me doing all this is because I truly believe and know that if you want it enough, and I don't mean if you want it enough but aren't willing to work for it, you know, you need to be willing to work for it. If you want to be a trader enough, you can be a trader. You're no different to me. You're no different from anybody else. You're no different from these people who put up the videos and say it's because of their magic system or their magic bot that's going to make you the money. You're no different. You know, you can be a trader. All you need to do is build the discipline. Learn about yourself. Learn about the psychology. Learn how to control yourself. Okay, so you can see here on the Friday, we pressed up and closed here. Made the doji candle yesterday, which was sitting basically at these highs also. This gave me the clue that if we started to break above, we were going to see a breakout. Didn't necessarily mean it was going to be a large breakout, but I was expecting it to come up into these next key levels, You can see from the previous swing right here at 7.3 sort of 65. I also knew that these levels represented potential good resistance. So although we broke up, I was still happy to look for the sells. I was looking for the buys from this level, take the market up, didn't get it. I was still happy to look for the sells. If we had broken down below the bottom of this doji candle today, I would have been expecting a stronger move down. So we know we got a little pop up and then we've seen the rejection. On this one, I would have expected a stronger move down before we started to see any sort of bounce. So that's the reason I was happy to get into the trade. Okay, guys, so there you go. 2 trades for the price of 1 today. A loss. Losses are never the end of the world. They're going to come. That's why I post up all my trades so you can see that there's break-even trades. There's trades that don't work out very well. That's why I post every trade up from a Tuesday. It doesn't allow me to cherry pick. I'm just showing the trades that I take. No trader is going to have perfect trading. They're not going to win every trade. Losses are normal. As long as you know that the loss was a normal loss, as in you followed all your rules, it's absolutely fine. And you also need to not then allow that loss to tear you apart and let you make mistakes. Okay, guys, so I'm rambling as always. I have a habit of doing that. So I hope that was helpful. I hope you've all had a good trading week. I'm James Orr, and thank you.